Hello, welcome to my channel. In last video, I have shared an approach to get the daily stock price data from Yahoo Financial site automatically into Power BI desktop, while R script programming, Power Query, and Windows Task Scheduler. In this video, I shall demonstrate a way to create the Moving Average Convergence Divergence MACD chart based on the previous stock data input in Power BI desktop while Power Query to run R script. The MACD chart is a popular technique analysis tool and can be valuable tool for traders and investors to make informed decisions about buying, selling, or holding stock based on trend direction, momentum, divergence, and overbought or oversold conditions. Regarding the definition, calculation, and chart explain, I have the descriptions in details at my website page, Technique Analysis Tools for Stock Price Movement Analysis. I have attached the URL link in the video description in below. However, like any technique analysis tool, it is important to use the MACD in conjunction with other indicators and analysis methods for a comprehensive understanding of market dynamics. The effectiveness of MACD depends on the specific stock and market conditions. Then how is the MACD calculated? The MACD relies on two EMAs exponential moving average of a stock price, i.e. the 12-period EMA, which represents the short-term price movement, and 26-period EMA, which represents the long-term price movement. EMA stands for the exponential moving average, also known as the exponentially weighted moving average, EWMA. It is a type of moving average that assigns exponentially decreasing weights to past data points. This means that the most recent data points are given the highest weight, and the weights decline exponentially as the data points get older. Let's look at the formula of EMA. The formula in more mathematical way is EMAT equal to current value minus previous EMA times alpha, and plus previous EMA, where EMAT is the exponential moving average and time t. Alpha is the smoothing factor calculated as 2 divided by n plus 1, where n is the number of the periods. Previous EMA is the EMA calculated for the previous time period. Current value is the value of the data point at the current time period. Usually we use the closing price of the current time period. Or the formula in more descriptive way is EMA today equal to value today minus EMA yesterday times 2 divided by 1 plus days and plus EMA yesterday. Now let's come to the steps to calculate MACD. Step 1. Calculate the short-term EMA. Typically, this short-term EMA is calculated using the closing price of stock over a specific period, often 12 days. This EMA is referred to as a fast EMA. Step 2. Calculate the long-term EMA. Similarly, the long-term EMA is calculated using closing price of the stocks over a long-term period, often 26 days. This EMA is referred to as the slow EMA. Now we are ready to calculate the MACD line. The MACD line is the difference between the short-term EMA and long-term EMA. Step 4. Calculate the singular line, 9-day EMA of MACD. A 9-day EMA of the MACD line is calculated to smooth out the MACD line and generate a singular line. The formula is singular line today equal to MACD minus singular line yesterday multiply 2 divided by 1 plus line, then plus singular line yesterday. Step 5. Calculate the MACD histogram, which is the difference between the MACD line and the singular line. Hence, the resulting MACD chart typically consisted of MACD line, signal line, and the MACD histogram. From the calculation formula, we see that previous EMA is referenced in the current EMA calculation, which means we have the circular reference in our calculation. For such case, usually to apply programming language codes to create the calculation is an easy way. Thus, we may try to embed R scripts in Power BI Power Query to make the MACD calculation. Okay, now let's get started with the Power BI desktop, which we have the imported stock price data before. In table view, select the table multiply stock data by R, which we have a 5 telecom manufacturer stock price. We have a trading date, stock code, and closing price. Right-click on the table and choose the Edit Query. For the demo, let's replicate the table. Name it as a multiply stock data with MACD by R. As some R functions that work with the dates might expect them to be in a specific format. So let's convert the previous transformed date type back to the text type, which allow us to control the format and ensure the capability with those R functions. On top ribbon, select the transform. Then on right top corner, choose the Run R script. In pop-up R editor, we see that notice in top tell us that variable name dataset is holding the data content of the table multiply stock data with MACD by R. Thus, we can work on this R data frame dataset for MACD calculation. Before diving into the R script calculations, let me highlight a note. When calculating the EMA and starting with the first data point, there is no previous EMA value available for the initial calculations. In such cases, you can either choose to initialize the first EMA value as the same as the first data point, or skip the calculation for the period. This leads to two approaches to calculate EMA. In my video, let me simply call them the first one as the approacher with initial value and the later one as the approacher without initial value. Usually, the approacher with initial value is commonly used because it provides a smooth transition into the EMA calculation, but it may result in a slight delay start for your EMA series. But after a while, the delay will disappear. In this video, I shall share you the approacher without initial value to calculate the MACD by R script. In next coming video, I shall demo you the approacher with initial value. Okay, let's get started with the R script creation. In the approacher without initial value, we shall use the ready-made EMA function in R packager TTR. As in stock data table, we have a multi-stock price data. Thus, we need function like the group by, arranger, and mutate to group stock code, sort the trading date, and add calculated columns for calculating MACD lines for each stock since old trading date point. For those functions, R packager dplyr is required. Load the two necessary libraries, TTR and dplyr. For the programming, we need two creation sections. Section 1. Define a function to calculate MACD for each stock code group. It groups the data by stock code. Within each group, it calculates 12 days EMA and 26-day EMA for the closing price. Then computes the MACD line by subtracting the 26-day EMA from the 12-day EMA. Then calculates the signal line, which is the 9-day EMA of the MACD line. Finally, it computes the MACD histogram, which is the difference between the MACD line and the signal line. After the calculations are done for each group, it ungroups the data and returns the modified dataset with MACD-related columns added. Section 2. Apply the function to your dataset. Let's first take the Power Query dataset by the renamed variable dataset. Then convert the date column to the date format as a day, month, and year format. Then apply the just created calculated MACD function to calculate the MACD indicators for each stock using the closing price column, and finally update the dataset. Now the R codes are ready, and let's run the script. At the first time to run the created R script in new desktop file, Power BI Desktop might require you confirmation and setting the desktop file regarding the processed data privacy. There are three options for privacy level check: public, organization, and private. My recommendation is to be careful to skip the privacy level checking and select one of the three data share levels based on your usage scope of the Power BI data and reports. For this demo, I choose the organization level. Our script went through, and the new dataset is appearing in table view with new created MACD indicator columns. Okay, let's create a MACD chart report pager in the desktop. Name the pager as a Telecom Manufacturer Stock MACD R TTR EMA. Place line chart visual for closing price against the date from the date dimension table. Format the color if needed. Place line and class chart visual for MACD lines against the date from date dimension table. Conditionally format the columns for MACD histogram. Place slicer for stock code selection. And stock code from the stock code dimension table, set single selection. Place slicer for year list from the date dimension table. Set multiply selection with all selection option. Last, place card as a dynamic title for the report page. Then create a measure, name it as a selected stock, which equals to selected value, dimension table codes, stock code column, and plus the character MACD chart. Add the measures to the card measure. Format the callout value. Finally, we end up the created Power BI MACD report pager with a nice formatting. Additionally, in the pager for year slicer, we have created a year hierarchy in date dimension table and add month number column in the hierarchy. With this enhancement, we are able to choose date and month level under each year for the charts. Let's take a look at the MACD indicators in the charts and see what insights and conclusions about the price movements we can discover to support traders to sell, hold, and buy. Let's choose Nokia stock and check the year data from the 2nd of January 2024 to the 6th of the February 2024, around 1 month short period data. I have used the Google OpenAI chatbot Gemini based on the uploaded MACD chart picture, and let's listen what Gemini told us based on its discoveries.
Trend. Overall, due to the limited time frame, it's challenging to definitively determine a clear uptrend or downtrend. The price shows some volatility within a relatively narrow range, making it difficult to discern a consistent direction. Short term, there appears to be a slight upward trend in the latter half of the chart, with the price closing higher than its starting point on February 6. However, this UPTICK could be a short-term fluctuation within a larger sideways movement. Momentum. The MACD histogram is primarily above the zero line, indicating some positive momentum, especially in the latter half of the chart. However, the fluctuations are small, suggesting the momentum is not particularly strong. Price divergence. There is no significant price divergence present. The price and MACD are generally moving in the same direction, suggesting no major discrepancies between price action and momentum. Overbought. Oversold. The MACD indicator stays within the middle of its range, not reaching the upper or lower extremes. This suggests the stock is neither overbought nor oversold based on this indicator. Overall, given the short time frame, it's challenging to make definitive conclusions about the Nokia stock trend. While there's a hint of a short-term UPTICK and some positive momentum, the overall picture remains unclear. Observing the stock's behavior over a longer period would provide a more reliable assessment of its direction and potential. Remember, technical analysis alone shouldn't be the sole basis for investment decisions. Consider fundamental factors and other market conditions before making any investment choices.
As the previous selected period is too short, let's select the 5 months price for the example, back from the September 2023 to the 6th of the February 2024. See what we will get from Gemini.
Sure. Here is an analysis of the Nokia stock trend, momentum assessment, price divergence, and overbought, oversold conditions based on the uploaded picture with data since September 2023 till February 6, 2024. Trend. Overall, the stock is in a mild uptrend since September 2023. The price has made higher highs and higher lows over the time frame, although there have been some periods of consolidation and pullbacks. Short term, the short-term trend is also upward. The price has been rising since mid-December 2023 and closed higher on February 6 than it did on December 15. Momentum. The MACD histogram is mostly above the zero line, indicating positive momentum for most of the time frame. The recent upward movement in the histogram reinforces the uptrend. Price divergence. There is no significant price divergence on the chart. The price and MACD are generally moving in the same direction, suggesting no major discrepancies between price action and momentum. Overbought, oversold. The MACD indicator has not reached the upper extreme of its range, suggesting that the stock is not overbought. However, it is nearing the upper end of its range in the last few days, so it's important to monitor it closely if the uptrend continues. Overall, the technical analysis based on the chart suggests a mild uptrend for Nokia with positive momentum. However, the uptrend is not very strong, and the stock is nearing overbought territory. It's important to remember that technical analysis should not be used alone for investment decisions. Consider other factors, such as fundamentals and broader market conditions, before making any investment choices. Additional notes. The chart shows a significant portion of Nokia's price history, which provides a more comprehensive understanding of the stock's trends compared to the previous charts you provided. The MACD indicator is just one technical analysis tool, and it should be used in conjunction with other indicators and analysis methods. I hope this analysis is helpful.
This kind of demo is just a testing with AI analysis based on we provided the MACD chart for stock price analysis. Later on, we shall create more advanced technique analysis tools and combine them together for a stock price analysis with the help of AI, and then we see can we get more accurate result. That is all about in this video regarding the creation of the MACD chart without initial value by Power Query and R script. In coming video, I shall continue to share the method on creating the MACD chart with the initial value assumption by Power Query and R script. Thanks for watching. If you like to watch more videos from my channel, please press subscribe button. See you in next video.